Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Friday, June 10th, EURUSD once again reversed in favor of the US dollar and consolidated below the 100% Fibonacci retracement level at 1.1409 today. However, the pair has been trading sideways in recent weeks, and the 1.1409 has not provided reliable for traders. The vast majority of signals generated around this level have failed to play out. Therefore, it is advisable to wait for the current sideways range to be resolved before opening new positions. Market activity remains subdued. The wave structure on the hourly chart remains bearish, despite the bulls' attempts to regain control over the past 2 weeks. The latest completed downward wave broke below the previous low, while the latest upward wave has not yet exceeded the previous high and continues to develop. The geopolitical environment has improved considerably in recent weeks, as military operations in the Middle East have at least paused, and Iran and the United States have signed a preliminary agreement. However, it will only be possible to conclude that the bearish trend has ended if the pair breaks above the 1.1620 high, or if 2 consecutive bullish waves are formed. On the 4-hour chart, the pair continues to trade within a sideways. Consolidation below 1411 keeps the door open for the decline toward the 127% Fibonacci retracement level at 1.1291. However, price direction has been changing too frequently recently, while overall market participants remains weak. None of the technical indicators currently show any developing divergences. The descending trend channel remains valid. And we're starting with pound sterling dollar pair with Din Lao. On the hourly chart, the GBPUSD pair reversed in favor of the US dollar on Friday, June 10, and declined toward the 76 Fibonacci retracement level at 1.3382. A rebound from this level would favor the British pound and support a resumption of growth toward the 1.3457, 3454 resistance level, which has already been nearly tested. Consolidation below 3382 would signal further downside toward 3335 and 3298. The wave structure remains bullish. The latest completed downward wave broke below the previous low, while the new upper wave has exceeded the previous high and continues to develop. Thus, the bulls remain in control, although we had expected this scenario to unfold about 2 to 3 weeks earlier. Better late than never. The bearish impulse that dominated in 2026 has been completed, and only geopolitical developments are capable of disrupting the bullish scenario. On the 4-hour chart, GBPUSD rebounded from the 100% Fibonacci retracement level at 1.3159, reversed in favor of the British pound, and advanced toward 50% Fibonacci level at 1.3409. Therefore, traders may continue to target the next Fibonacci level at 38%, 1.3467. However, market activity remains relatively subdued, making the hourly chart the more reliable reference for trading decisions. the CCI technical indicator may continue form a bullish divergence in the near future.
That's all for today. See you online soon.